How does an option seller earns more profits? It is said that in options trading it is the seller who earns mostly, whereas the buyer has a low probability of winning the trade. As we all know that the option seller earns only at the time of forming the contract, when he writes a contract or sells the option to the buyer. And he has to pay the premium difference to the buyer if the trade goes in favor of the buyer. For example, if the Nifty is trading at 16,300 levels and a seller sells a call option of Nifty 16,300 at the premium of 100 rupees. That means he has received 100 rupees at the time of initiating the contract. In this case, if Nifty goes up, the buyer will get profit as he has purchased the call option. That means if on expiry the seller has to pay the difference of upper side to the buyer. Let's say Nifty on expiry closes at 16,450, the seller will have to pay the upper side difference E150 to the buyer. But remember, at the time of entering the contract the writer has already received 100 rupees. So, the loss for the seller here is just 50 rupees. As the contract was a call option, so the buyer will not earn if the Nifty goes below the strike price. Here seller has already received the premium at the time of entering the contract. In this scenario, the seller has won the premium, whereas the buyer will lose the premium and will not receive anything on the expiry of the contract. In which scenario does the buyer earns in the options trade? In the option trades, the buyer has the opportunity to gain unlimited profit with limited risk. The buyer gains heavy profits when the difference between the level of the underlying asset, let's say Nifty, and the strike price is very high on the favorable side for the buyer. In this same example, if Nifty expires at 16,500 on expiry, the buyer will receive the difference, 200 rupees, from the seller, for which he has paid only 100 rupees at the time of entering into the contract. In this way, the seller earns when there is either a movement in his favored direction or there is no moment in the market. Always remember, it's the buyer who needs the price moved in his direction and not the seller. Thanks for watching the video. Do subscribe the channel for more such informative videos.